So it's going to be failing always, right? If you do that. So I will never be aggressive because I know that price does not worth chasing. Just wait for it. It's going to come back for you. That one is very, very sure. As long as you have an edge, a proven edge for that matter, you have a proven edge, price will come from you for you. So don't be aggressive. This is a big zone, right? This is a big zone, and we know that this particular demand zone is also a sweep zone. Why? You can see, if you look left, you can see that it's reacting from a supply zone, then it's started to give us some little reaction, then it later failed that supply zone. So this zone here is a flip zone for me, right? I love flip zone, and it also have leg inducement. It has this inducement before hit. Fine. So you have a zone like this, you are okay, you are fine, right? You are thinking in your mind that okay, I'm going to make money the moment I have mitigation and my entry model show ups. And what happened? You have a mitigation. Fine, good for you, happy day. You have a mitigation. After mitigation, you check, okay, this is your PBL, the point before liquidation, right? Before you have this liquidation, then PBL fail. PBL fail. Once the PBL fail, what's next? You want to get involved, right? You look for your order block, right? You look for your entry, right? Maybe you want to use this candlestick or this candlestick. Let's just use this big one, right? You want to use this candlestick for your entry, and you are probably going to target that high. That would be your entry. If you are using either any entry model that you are using, this will be your entry, and your stop loss will be below here. And look at it. What price did? Price failed, right? It run a little bit in your direction. You are excited. Okay, you are going to make money today. It's a wonderful and good trade for you. This is 4R, 4.3R, and price just run a little bit and just stop you out. Why? Because there is an order flow that enter this zone, and that order flow is against you. But you just see, okay, this is a zone and you want to enter a trade. This is an order flow that enter that zone. This is a bearish order flow, right, that enter that zone, and you just look for entry model directly. At least if you want to look for entry model, you will let this particular zone get taken out first. You see something like this, then you can look for your entry model, or you take entry directly from here. So you take entry directly from there. So now the zone has failed, the internal order flow continue, and now the order flow has now shift bullish back. It has shifted in your favor, and we are still within that demand zone. We are still within that demand zone. If I want to buy, right, if I want to take a entry model, I can see that we have mitigated the extreme of this demand zone. We have mitigated the extreme. So this is where I can be interested in looking for entry model. This is where I'll be interested in looking for entry model, and in this case, this will be my entry. The moment this eye gets taken out, right, that is my PBL. You can very see it is very obvious, right? This point before the liquidation, right? This is my PBL. That will be my PBL, and this big candlestick is going to be my entry candlestick, but it is a big one. It's a big ass, so I don't want to use that whole candlestick. I will just use it from this weak low, right? From this low, from the low of that candlestick to this low. So that will be my own entry. You can see the same zone, the same trade idea, the same entry model, but I use it in the right place. That is why I get involved and I don't get stop out. I use it in the right place. That is why I don't get stop out. So you don't want to be aggressive. You don't want to be aggressive. And this is 3-hour trade for you. Beautiful. Happy day. Right? This is a 3-hour trade for you. But if you are kind of a stubborn person and maybe you want to be aggressive, that one is for you. Perhaps you take a loss here and you take another win in that area. You are good to go. But I'm telling you, if this is a live market and you take a loss, your psychology will kick in and you won't even see this particular trade opportunity right here. So if you want to look for entry model, let it be very obvious or at the extreme. That is where you want to look for your entry model. At the extreme, that is where you want to look for entry model, not at the edge, especially if it is not M15 zone. If it is 4-hour zone, you know, this particular zone is a 4-hour zone. It's a 4-hour zone. So you don't want to be aggressive in looking for entry model. Okay, let's say we don't see entry model, or we don't see that entry model being formed, right? That one has gone. Maybe we missed that trade, perhaps due to one or two factors. We missed that trade. Fine. And we have a breakout structure. We have a bullish breakout structure here, and we also have another one, right? This is where we have a shift. This is where the internal order flow shifts to bullish. This is where we have a shift, right? And we have another breakout structure, which is I boss. So we have another breakup structure, and we know what does a breakup structure tell us. A breakup structure confirm the trend, right? It confirms the established trend, right? It confirms the continuation of that trend. It's confirming. That's what a breakup structure does. But this is going to be our internal strong low, right? So this now, if we take a trade from here, this is a phase A trade. This is a phase A trade. It is aligned with the swing structure, and it is aligned with the internal structure. But here we don't have entry model. You do two things. You wait for entry model to form, or you let the trade go. You don't force it. You let the trade go. You don't force it, right? If you don't see your entry model, you don't want to enter, right? You know your entry model. That's what you are looking for. If you don't see it, you don't have a trade. And if you see it, you have a trade. Happy days. It's as simple as that. But whenever you have a big zone, don't be aggressive looking for entry model. Allow order flow to shift first before you will be looking for entry model. So this is a strong internal. So we know now for sure that our internal is aligned with the swing structure, and we want to do what? We want to look for buy to target the weak eye, or anywhere, right? To target the weak eye. So these are our strong weak eye. That's what we want to do, right? We want to look for entry model. So mitigation, all this candlestick has been mitigated. This black one, we can still have some orders in this weak area, right? We can still have some order, but this is the last zone that is very, very obvious even for a beginner to spot. So that is why I mark out this particular zone. So now I will do two things: wait for my entry model to form, or wait for the trade to go, right? I don't want to be aggressive. And if you want to be aggressive, for me, that's the two things I will do. But if you want to be aggressive, you can try to take a trade from here. You can try to take it from here, and perhaps you target this eye. But this is not a good trade for you. This is not a good trade for you. If you check that dashboard, if you check it out, you will see that condition, this actually is one of the conditions that I want to see, right? That will confirm for me that I won't get any entry, right? If I have less RR, if my risk reward ratio is less than 3R, so for me this is a red flag that this is not a good zone. This is not going to be a good trade for me. It's number one red flag, right? If I see something like this, no matter what, I will not take that trade. Why? Because from the swing, just imagine from the swing low to the swing high, not internal, from the swing low to the swing high, we don't have any trade. And if you think of adjusting your this thing to this place, I'm just telling you. I think you have off your microphone. You can just on it, and if you can hear me, you can either on your microphone or text it to me that you can see my screen. You can see my screen, right? Okay, no problem. So yeah, all right. So let's continue. I won't be aggressive. I will allow price to show me very, very interesting things, right? So let's just play price forward. So you can see how price liquidates this low. It gives us a very, very strong liquidation of this low. It liquidates this low. And what happened next? A PBL failed. So don't be aggressive. Price does not worth chasing. That's number one thing I want you to know. Price does not worth chasing. Rather, you don't want to chase price at all. You don't want to do that. Price does not worth chasing. And yeah, with that strong liquidation and a sharp movement that we have to the upside down, um something of, are you there? Hello? So okay, copy that. So let's just continue. Right, so now we have a liquidation of this low. We liquidate this low, so you can now take your trade from this candlestick. But I have a problem, right? And the problem is it's something similar like fear of missing out. You can call it fear of missing out, whatever. But for me, whenever I have a good trade, I don't want to miss out on that trade, right? So I will like to go to like 30 minutes time frame to confirm my entry before I even enter that trade. I would like to go to 30-minute time frame so that I won't just be sitting where price won't even come back to mitigate, right? So I don't have something interesting on 30-minute time frame. So the next one is 45-minute time frame. I'm looking for a candlestick confirmation. So I think I have something interesting here, right? This candlestick, this particular long candlestick. And lastly, 1 hour time frame, right? 1 hour time frame to check if I have something interesting in the time frame. So I won't just set limit order and be hoping for price to come and tag me in, and at the end of the day everything will just go in my direction without anything. So yeah, we are good to go. Now let's back to M15. Let's back to M15 and take our trade and hope for a tag in that trade. We hope for tagging in that trade. So even if you go to M15, you can see very clearly that we have a PBL field and we have a chalk. We go to M15. So we are not here to prove that we are right. Right? We are not here to prove that we are right. So we just want to let our hedge play out. Right? So I'm placing my order here and my stops below this candlestick, and I'm targeting this high. I have another problem. This is also a red flag for me, so I will try to adjust my tools to like somewhere around here so I can get a 3 hour trade. So this will be my entry. Now let's place the limit order. So I believe the entry is clear to you, right? I believe the entry is clear to you. If I have a missing trade, it's fine. Let's just play price forward and see what happens. Remember, we are still in this internal range, right? We are still in this internal range. So if we get stop out and we are still in this internal range, if we get stop out and we see price pull back a little bit and we see entry model, we can still take the trade, right? So there's nothing to be panic of and there's nothing to be scared of, right? So yeah, let me just set limit order. If this is gonna be a good trade, I should get again. I think I should just play the price a little by little. So we get again, right? Happy day. Get again, and let's see what is happening. can get stop out, SL can hit, TP can hit. We don't want to panic. And after you get involved in a trade, what's next? Management, right? If you check the dashboard again, you can see that I have management rules, right? I have management rules. Although this is not a good or best looking trade for me, but at least I will manage it. And what I'm going to do is, once this once market take out this particular high, if I see a break candle closure of this particular high, I can set my trade to a risk free trade, right? I will just move stop loss to break even, and I will hope for the trade to deliver, or to wait for either take profit or SL. But for now, I will do nothing until price take out this high. I will do nothing. If price go back and hit my SL, it's fine. And if it go to my take profit, it's fine. That's number one. Number two things is, this my SL, based on my rules, it is not correct. Why? My rule for setting SL is, whenever I have a zone like this is my zone, right? I will now check the traded price, the low of that zone. In a bullish scenarios, I will check the low, then I will add 2 pips behind that low. So I use 2 pips rules, 2 pips buffer behind or above my zone, right? But for this is just random this thing. If it is on live markets, I will use 2 pips rules, right? My zone, I will leave 2 pips behind my zone. That will confirm my SL. Not that I will just think of, okay, my SL should be here. No, I have rules for setting SL, right, which is 2 pips rules. My stop loss will be 2 pips behind or above my zone, right? So let's play price forward and see what happens. So you can see a nice and choppy market. You don't want to be panicked. Like I said, this is not the best trade for me, but since I have seen my entry model, and this is a phase A trade for me, pro swing, pro internal, this is the best area to play it. But the mitigation that we have is not given. It's not given. So we wait for the outcome. That's it. So now here we have it. You can see that price has now break out this high. Zero panicking. Price has now break out this high. For some traders, whenever they want to set their break even, they can move their SL to somewhere around here. I don't want to do that. First of all, I think, let me check the current money trade. This is about 2 hour. Wow, that's great. This is about 2 hour. So in a 2 hour trade like this, I will just make it risk free. Right? But I won't just set my SL to my entry. I'll put some pips or a little movement above it. Why do I want to do this? It's because I understand that the moment this price tag me in on my broker or on my what's it called, or on my profile, they will charge me for commission. And right, they will charge me for commission, and I shouldn't pay any money on a trade that I don't make money on. So I would like to use that SL to cover their commission. So if I get taken out, it will be break even, and I will have no loss, right? I will have no loss, because the commission is also count as loss, right? The commission is also count as loss. So I will just leave this trade like this, because I believe that price can still do something like this, like come back here and started moving up like this. Anything can happen, but I don't want to be panic. As long as you can see it's a very beautiful and nice trade. No rushing. We have a mitigation, we have a POI mitigation, and boom, price come deeper, right? I'm expecting the order flow to shift bullish before, but price come deeper, and now we have mitigated the extreme. We have our first trade here, but let's assume we miss that one. Right, that's why I said price does not worth chasing. If you miss one trade, you will definitely see another trade. As long as your edge is working, you have a proven edge, it is working, you will see another trade opportunity. Don't rush. Let price present it for you. So in a case, we miss this particular trade, and we have a break of structure, and you are kind of aggressive, and you have like a rejection candle here. So you just place your entry above this rejection candle, hoping that you want to use LC1, which is using the leg inducement from the left, right, and using the liquidation candle, hoping you want to use LC1. And what happened? You get taken out because you are too aggressive, and it's like you are revenging, and revenge might drive you, but it's also going to blind you as well, right? For example, you take a trade here, right? Maybe you took a loss here and you miss this trade. You will be frustrated. You take a loss, you have a missed trade, you want to be aggressive, blah 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 blah. You use S1 here, okay, I same NC model, you don't want to miss the move, you don't want to do this, you want to blah 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 blah. Yeah, you get that gain. Good. Price will move in your direction. That is revenge. It drive you, but it blind you to see what is happening. That price may come back and take out this low. So you want to rely on structure, order flow, liquidity, and most importantly, entry model. If you don't see your entry model, you don't want to get involved. You have no business with the trade. You don't want to get involved, right? So enough for talking. I talk too much. Let's just play price forward and see what will happen. So now that we have this particular movement, right, we take out this high again. Remember, if this is where I put my stop loss, you know that by now I will have get taken out, right? It is also a structural low on lower time frame, but that is none of my business, right? It's a structural low on lower time frame. So if I want to take another trade, if I want to add to this position, it's going to be somewhere around here. It's going to be somewhere around here if I want to add to this position. But it's very very simple to say it on backtesting, or to to just think of it. I will have had position, I will have do this, I will have do that, I will have do blah 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 blah. Yeah, entry model forms here. If you are wondering, entry models form here as well, and this price is efficient. This efficient entry model has formed here. We have mitigated this demand range, right? This is where we have a break of structure, and price has traded below it, so it is efficient. But for me, I don't want to be aggressive. But let's say we are not in this particular trade that we are currently in, and we see this particular trade, we have a fake break, strong liquidation, and our PBL failed, right? Our PBL failed. So the next thing is to set limit order on this high. But now it is kind of risky, right? It is risky because this can also be an just a inducement, rather. This can also be an inducement, right? We can continue selling from here, and yeah, this can be inducement, just a fake movement, but it's fine, right? Just for the sake of this example. So I'm showing you the powerful of your entry model, and maybe after this session I will take you through my entry model. It is something you related to, it is something you understand and you know before, but I will just kind of do some enlightenment about it, right? So this will be my SL. My stop loss will be below here. I will have two stop loss. My first trade stop loss will be here, and my second trade as well. Let me just set limit order. Trust me, if this is on live accounts or on a live trade, I won't do something like this. It is silly. It is very very silly, but it is what it is. Sha, it is what it is. Just in case you miss this one and you want to take the same risk, you can just do something like this. You get again, you do nothing. Remember, until either SL or TP, you do nothing. So the high that come and tag you in, the high that tag you in here has did what? Price has take it out, right? Price has take that high out. You can see it is very very crazy, right? The way the price move against you, you will be like panicking, but once you have a hedge, you have no reason to panic. Just allow price to do its things, and you are good to go. Now this second trade, you can set break even. This is not a good area to set a break even. Why? Because price can still come back here. Price can still come back here, mitigate this zone and go and deliver. Price can still come back here. So if you are in this position already, it's advisable for you to just leave your stop loss below here. If you take a loss, it is fine, you will win in another trade, right? You don't win every battles, but if you are not in this position before, you can also leave your stop loss, or if you choose to make it break even, but this place is looking good for me, and I'm also expecting price to come here and before moving up, right? So I will leave my stop loss below here as well. I will leave my stop loss. I won't move it for now, but if I see some kind of silly movements, because price also do silly things, if I see some kind of silly movement, so I will like to set break even. So let's play price forward and see what is happening. So now you can set break even for it, right? You have another break of structure after the high that tagged you in. You have another high being taken out, so this confirmed that okay, now you are good to go. So you can see we have two positions, both 3R and both in break even. We have a very risk-free trade. So one thing before I play price forward, if this high gets taken out, right, this my very low break even, I will move it to somewhere close to here. No, that will be my take profit. So this my second one, I will move it higher, right? I will move it higher. So yeah, that's it. Let's place price forward and see what is happening. So we have our first take profits. You don't want to be aggressive. So now the second trade SL can be below here, right? The second trade, you can set the break even for the second trade, right? Your SL is going to be below here, and even if price wants to pull back, it's going to pull back to this zone right here, right? It's going to pull back to this zone, and this particular low is going to be like inducement for this zone. If this zone wants to hold before we get take profit, it's going to be inducement for that zone. So my SL will be, I won't move it very closely to that area, so my SL will be here. Now I have my first trade being a winning trade, my second trade being a break-even trade. So I have no reason to panic, just allow price to do its things. So since price swept liquidity below here, this is just management. It's a silly management, but it is fine. It is called management. We are here to make money. We are not here to prove to the market that we are right. Right? We are not here to prove to the market that we are right. You can just secure a little profits. I think this is the safest place to put it, but it is fine. Let's just secure a little profit and allow the market to run. Remember, price has already take out this swing weak high, and after a break of structure, what do we expect? We expect a pullback. We expect a pullback, right? We expect a pullback. It can happen immediately or after, but after every break of structure, we expect a pullback to occur. So allow price to do its things. So based on this particular order flow, moving this bullish order flow, right, this one is confirming a sell this thing for me, right? Which will make my break even be somewhere around here. It should be here, right, below this candlestick that is currently printing. It should be below this candlestick that is currently printing. Why? Because we have something like a failure swing. If you focus on this small order flow, right, this small order flow, no, candle closure does not matter for a change of character. Candle closure does not matter for a change of character. You don't need it to be a candle closure, but if you have a candle closure, good for you, but you don't need it. Remember, a fractal zone, right, a change of character is what confirm a fractal structure shifting from bullish to bearish, and a fractal structure is an aggressive type of structure. So it can be a wick, You don't necessarily need it to be a candle body closure, right? You don't necessarily need it to be a candle body close. It can be a wick. So back to what I'm saying, you can see this bullish order flow. So this low here, it mitigated this demand zone. It failed to take out this high. Then it creates something like this, like a flip zone, right? It's creating like a flip zone, right? So that's why I want to put my we have take out, if this is a liquidity sweep, we have sweep this low, right? I don't expect price to come deeper before it go and take out that high. And judging from the perspective or this small order flow that I just explained, right? This can be a order block. This candlestick can be a order block, right? I've seen it play out very well, right? This can be a order block, and price can do something like this. From this moment, price can do something like this and drop down perhaps to somewhere around here before we continue the up movement. But once my objective is complete, I don't want to sit down on M15 time frame. I want to go back to my 4-hour time frame to see what is happening on 4-hour. Remember my zone right here. What give me this objective, right? What give me this particular trade idea is not M15 overall, right? This particular zone, I pick it from 4-hour demand zone, if you can remember. So I'm using 4-hour. I'm just using M15 for my entry model. M15 for my entry model. That's it. I'm looking for entry model on M15. I don't have business with M5. So M15 is my entry model, right? But you can see the power of understanding medium time frame phases, right? Because I understand my medium time frame phases, I was able to get a 2 consecutive trade, right? This can be a break-even trade. We don't know what is going to happen next. This can be a break-even trade, but at least I have a 2 beautiful trade, right? And I can also say it is a 3 trade self. I can say it is a 3 trade, but let me check what happened here. So we will just say it is a 2 trade because this is a this is Friday price action over Monday. So we won't be able to enter within this area. This is around 7:30 UTC plus 1, right? So we won't be able to enter a trade here. So this one we miss it, and we have this particular one, and we also have this second one running, right? So yeah, that's it. So back to this one. If price come back and take me out here, I'm good to go, right? I'm good to go. You can see price is rejecting from this particular supply zone. This is not a sell supply zone for me. I'm not interested in selling from here no matter what. I'm not interested in selling from here. So I can't just go to M5 and look for my entry model. I look for my entry model on M15 and I'm good to go, right? So now we have a breakout of that high, nice and beautiful. So now we should have a take profit. Boom, price refused to give us our profit target, but it is fine. So we just keep on managing. We keep on managing. Remember, we have already secured a 3R and we have another one still running. So this is a strong low. It swept liquidity, so our stop loss will remain the same. But with this momentum, I believe price is going to take us out here. But let's see what's happened. Boom, we have a take profit. So you can see the management as well. First of all, you want to get the higher time frame narrative, and you need timing. You need M15 for your entry model. You need your entry model. After your entry model, what next? Management. Of course, you want to manage the trade, right? Your target. We have 2 types of targets. We have objective target and subjective target. These are particular first trade. This is objective target, right? This is objective. Objective target is targeting the highs and lows in the market, drawn of liquidity, where price should head to. We know that we are targeting this high. This is a high that we are expecting to be taken out. We are targeting this high. So this targeting this area is an objective target. But subjective target is targeting where you believe price should go based on what you know, right? Based on your knowledge. You can see this is not a objective target. but it is an subjective target. This is where I suggested that price should go, right? I suggest if price does not hit my TP, right, remember the objective target has already been fulfilled and price failed to hit my TP and retrace, I will hold myself accountable for it, because I've already ignored the objective target. I'm targeting the subjective target. Whatever it is that I am targeting is based on whatever knowledge that I have, right? It's based on whatever knowledge that I have. So this is subjective target and this is objective target. So as for beginner, I will always advise you, or as for someone that want to be breeding is this thing, I will always advise you to go for objective target highs and low. That is objective target, right? At the particular time that this price is right here, when we break this high, the objective has completed. So that is why I can now set break even. Whenever I'm targeting a subjective target and I have seen a objective target being fulfilled, I will use my management. I will manage my trade, right? I will manage my trade, because in the general knowledge, price has reached where it's supposed to reach. But where I am targeting is based on what I believe and what I know, right? The kind of knowledge in me that is telling me that okay, price will reach this area. So whenever price reach objective target, you want to manage your trade if you are targeting a subjective target, right? If you are targeting a subjective target. So now my objective has been fulfilled. What next? I go back to 4-hour time frame. I don't want to be blind. Yeah, I don't want to sit here and be doing be guessing that okay, we should have a mitigation here, we should have. I'm using 4-hour zone. It's as simple as that. I'm using 4-hour zone. It's as simple as that, right? So I want to go back to my 4-hour to see what is happening. So remember, I said that this particular zone, remember we mark out this zone on daily time frame, it has high chances of holding price. That particular zone, yeah, it have high chances of holding price. But we can very see clearly that on 4-hour, I don't think we have a clear this thing. But let's just try and find something interesting for ourselves. So you can see our 4-hour internal structure continue bullish. Is this record stop or still recording? No, it's still recording. 37 minutes. Let me just I think we should stop here. And we now have another 4-hour internal break of structure, right? We have another 4-hour internal break of structure. So, right, so we are expecting price to do something like this, come back here, and if this bullish order flow is going to continue, we have something like this again. But if it is not going to continue, we may have something like this, maybe sweep of this high, or failure swing, or just a rapid break. That is the three type of structure shift that we have. A failure swing, when a low failed to complete its job, a failure swing, a sweep of liquidity before the shift, or just a rapid one, right? Just a rapid break. So I think let's just stop here. We will continue in another lesson. This is about 30-something minutes over self, because the network is kind of frustrating. So today's Monday, I will need to check price and see what is happening. So you can see there's no reason for you to stress yourself or to force any trade. You can see you secure overseas out trade. Overseas out. It's as simple as that. Right? It's not going to be happening every time, of course not. It's not going to be happening. But once you see it, you can never unseen it. Once you see it, you can never unseen it, right? So it's as simple as that. We'll have to stop for now. See you on the next one.